Hey guys, so as usual, all information on this channel is for educational purposes only, blah blah blah, don't sue me. Okay, so it's June 19th, we just had an hourly close, 3 p.m. Let's take a look at the chart. So what I wanted to go over in this video were exchanges and time frames. I had some questions on what to watch and when and why. So real quick, figured it'd be good each video to go through where we're at currently in the price and to give some cloud analysis on that. So as you've probably seen on Twitter, Kuma breakout with the TK cross, which is the long signal. You had plenty of time to get in here. We had the breakout, excellent. TK recross, that would be your closing signal. TK recross again, that's another entry signal. And we've yet to have the TK recross for the closing signal. Now this TK cross above the cloud is never a short entry signal. Some people can play it like that. I've never really found much success. The whole idea of the price being above the cloud is that we have a trend that's bullish. So trying to short before price falls below the cloud is trying to like counter scalp the counter trend, which doesn't really work normally. It might work for some people, it never worked for me. One thing I didn't talk about yet is where my stops are when I'm taking these cloud trades. And my stops are always at the cloud. So if we ever get a candle close in the cloud, the trade is stopped out. And you can see here, conveniently touches the cloud, doesn't enter the cloud. And it's so crazy to think that this stuff is drawn 30 periods ahead of time, and it somehow, drew this line, and that's where we stopped. But anyway, there's also a tweezer bottom, which is a candle indication that that's a local bottom. So if you were long here, you wouldn't be stopped out here. Now I would close here based on the cross if I was long here. So again, I'd reopen here based on this cross. And again, your stops are at the cloud the whole time. And again, we have another tweezer bottom basically at the cloud. Didn't enter the cloud, so you're not stopped out. Trade's still good. You would be stopped out here, however, depending on how you play it. On Bitfinex, it did actually close the candle in the cloud, which is why I actually shorted based on my edge-to-edge thing. Which I'll explain in another video sometime. But it eventually got stopped out, obviously, because it didn't continue down. And this whole time, if you're not in the trade already, you want your bids at the Kijun, which is this sky blue line. So your re-entry checklist would be bids at Kijun or TK recross. Those are this is like a manual entry, whereas this is just kind of like bids, this is a limit entry here. So let's say you got stopped out here. Your bids this whole time would be at the Kijun, and as you can see, that would work out perfectly for you. You wouldn't be stopped out because, again, it didn't go into the cloud. Kind of weird how it always knows. Now, it doesn't always look this crisp and clean on all the exchanges. Sometimes quarterly futures don't really follow the cloud exactly. I know a lot of Asian traders use the cloud, so that could be part of the reason why the cloud sort of works so well. I don't know. So people were asking me time frames and exchanges, and my favorite time frame is always the hourly. I can always see what I need to see on the hourly. But the highest time frame always wins. That's like the classic rule. There's some caveats to that futures, OKCoin futures can lead price depending on settlement, depending on what's going on in that exchange. They tend to lead based on volume. Bitfinex can lead if there's certain things going on in the West, if there's some new stuff going on. Again, China can lead depending on who's awake, news, etc. Arbitrage can also influence the price. Arbitrage occurs when, let's say, we're higher in CNY and lower in USD based on those currencies. So the idea is you'd buy Bitcoin in USD, like on Bitfinex. You'd move the Bitcoin to a CNY exchange, like OKCoin, and then you'd sell in CNY. So that means there'd be sellers in China and buyers in the West. So the price would sort of come to an equilibrium eventually. But you always want to check the daily and the weekly when you sit down or whenever your trading window is. And I kind of always have those in my head. Like right now, the daily has this C-clamp overbought thing going on, which I've posted on Twitter, which is why I keep trying to short up here. And you can see that this triangle is forming. So we should get a resolution of this in a direction pretty soon. We did have an hourly candle 13 minutes ago, and it looks like TK is getting pretty close to a cross. We'll see what happens. That'll be another long close signal. So the other thing is, which exchange do you watch and where do you watch it? There are a few options. I'm not a big fan of Bitcoin Wisdom, but that's an option. They have most of the exchanges. Let's take a look at Huobi. No, not all these websites always work, depending on price, action, and volume. That's why it's good to know just what's out there. Another reason to look at these is I can pull up the 3-day. I can't pull up the 3-day on TradingView unless I have a pro account. So there's Bitcoin Wisdom, there's Crypto Watch, and you can see there's all of these different pairs, different exchanges. And again, you want to chart the one that has the highest volume because that's the one that's probably going to be moving things. Even though you might trade on BTCE, you still want to trade on or chart on the WAN and see what's going on before you make any decisions. And then as far as futures go, there's a settlement countdown website. I'll link all this stuff in the description. And you can watch the settlement countdown. There's a better website for this, but I can't remember what it is at the moment. And there was another question whether or not I change my Ichimoku settings. I never change the settings ever. I always use the 20, 60, 120, 30 for crypto, and for Forex I always use 18, 32, 104, 26, which is doubled default because they're not a 24/7 trading. There's weekends off in Forex, so that's why it's just normal settings. If you change your settings a lot on stuff, you're kind of like curve fitting, which is something you want to avoid. Obviously, you want a system that is consistent everywhere as much as you can get it, and that way when you see a signal on anything, on any time frame, you can act confidently with a certain probability. The doubled settings are basically doubled time frame of a cloud with the current time frame candles. So if you're on the hourly and you're looking at doubled cloud, you're looking at 2-hour cloud basically. I mean, it's not like anything insane. It's just, I know it's a weird concept when you first come into contact with it, but it kind of makes sense to eliminate some the signal versus noise thing. And going back to the hourly time frame again, this is another reason why I love the hourly. I can see trends in ways that I can't see trends on the 4-hour, for instance, or the weekly. You can sort of look inside the candle. You know, when you're going from a daily to an hourly, you're seeing what's happening in that candle. And you'll see this chart pinned to my Twitter feed. But I mean, you'll see this stuff all the time. You'll see sideways, and then you'll see a breakout, and then you need to make some decisions. What do you want to do? Do you want to go long? Do you want to go short? Where your stop's going to be? I'll put a link to this in my description again, but it makes so much sense to me the way the cloud draws everything, how everything works out. And as long as you're awake and aware of what's going on, it's very easy to just act on, a new trend that was all of a sudden sideways for a long time, and then boom, and then that's how this trend sort of started. And one last quick thing, you don't want to open a trade on a certain time frame and then close it on a much lower time frame based on those conditions. If I'm opening a trade on the hourly, I don't want to go to the minute chart and get freaked out and self-sabotage myself and say, oh, this looks really bad. Or, you know, if I'm opening a trade on the weekly, I'm not going to go down to the 30-minute chart and say, oh, this is crap, I need to close this. You know, you don't want to self-sabotage yourself. You want to maintain consistency and just get out of your head, you know, let the chart do its thing. Let your indicators or system tell you what to do. And then, oh, I forgot one last thing. So an additional stop system, it's called the Bill Williams fractal indicator on TradingView. This is a concept I borrowed from Chaos Trader. So the idea is you turn on this indicator when you're in a trend. The trend should not break bearish fractals if it's in a bull trend, okay? So bearish fractals would be an example right here where you have like this trident of a high, low, high type deal, okay? So you can see this all the way up, high, low, high, high, low, high, high, low, high. So as you're seeing these fractals, you're moving your stop up, okay? So let's say you went long somewhere in here, your stop. Now these won't show up until 2 candles out, so you won't see this fractal appear until you see this candle. But so you're at this candle, your stop's here. You're at this candle, your stop's here. You're at this candle, you move your stop up to here. You move your stop up to here. You're at this candle, you move your stop up to here. And all of a sudden, you're getting out of the trade in a better way, I think, than waiting for the TK cross. And this is a pretty good example of that. I mean, you can see if your stop is here, this candle went below your stop, you're out. So you're out this whole time here, and your bids are just on the Kijun. So your bids would be on the Kijun. If you felt that was a good strategy, you might close based on this TK cross. Again, then you reopen. So let's say you reopened your long. Here's a bear fractal, so your stop is here. Bear fractal, stop is here. You get stopped out. So this really saves you the most trend with sort of using the cloud and this fractal indicator. So I think that's pretty cool. And TA is just using math from the left side of this chart to predict the right side of the chart. And all indicators and oscillators tend to use the same data, but they say something in slightly different ways. Alright guys, leave me some comments below. Thanks for the subs, and I'll talk to you later.